The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the International Model Investment Club. My name is John Catterson and I'm the Vice President. We're going to go over some basic introductory stuff right now. You can visit and subscribe to our YouTube channel at this URL. This is also available in the handouts, which I'll go over in a second. And if you visit and like our Facebook page and the Better Investing page. Moving on to the next section of the IMIC background. We were founded in May 2016. We're a Better Investing Model Club open to the public. We have monthly meetings held on the third Monday of each month. In December, we meet on the second Monday of the month due to Christmas. We use hypothetical money to avoid issues with currency exchanges and taxes. Our primary role is to be a learning lab to learn better investing principles and the fundamentals of stock investment using the online stock selection guide and to learn investment club operations management. You'll see some of that today. All meetings are held online, serving visitors and guests from around the world. As of currently, we have 13 members from the United States, Canada, China, and Singapore. This is very important. It's to show how to utilize this little bar over for GoToWebinar on the right. The agenda is available in the handout section of the control panel towards the bottom there. And also this presentation I'm looking at right now is available in the handout section as well. All visitors, guests will be muted during the meeting and may post questions in the questions section, a little bit above that. At the end of the stock presentations, visitors and guests will be unmuted and ask for their comments and questions at the end of the stock presentations. So, and here's our disclaimer. The IMIC disclaimer: the information presented is for educational purposes only and is not intended as a recommendation to buy or sell securities mentioned. Views expressed are those of participants only and do not necessarily represent those of Better Investing. Investors should conduct their own research and analysis before making any investing decisions. Securities discussed may be held by presenters in their own portfolios. This presentation may contain images of websites, products, or services not endorsed by Better Investing or the presenters. And this meeting can be recorded and will be posted to our YouTube channel as a form of minutes. So that's the end of our introductory material. I'm going to go over our agenda now. We just did that. And now here at 5:30 is Pacific time is our agenda. We're doing the agenda review. So we're going to have a treasury report. I believe Jay is going to do that today. We're going to have our May 2022 education topic. I'm going to do a brief book report from Investing Between the Lines, hopefully about 5 minutes long, and just a brief book report on that book. In June, Jane will be covering the Berkshire Hathaway annual letter in a longer report, probably about 15 to 30, I think. I'm not sure what she requested last month, but something like that. Then we're going to go over our quarterly and annual reports for 75 minutes. We have a few buy recommendations this month. We're going to cover those first. We don't have any sells that I'm aware of. If anyone has any sells that has not yet let us know what they want to do, they should probably let us know offline as soon as possible. We want to cover those first if we have any sells, but then we'll cover the buys and then the holds if we have time. So these are in alphabetical order based on buy, then buy, hold, then hold so far. And then at 7:05, open mic for guest questions and comments for 10 minutes. And then we'll do some club business at 7:15. Guests will be removed and we'll do some club business at that point. And that's the agenda that I have. If there's no questions on the agenda, we can go ahead and move on to the treasury report with Jay.
All right. I am presenting treasury report on behalf of Reddy. He's not here today. Excuse me, make a quick change. Why? I don't know why this says January. Sorry, just caught the mistake. Last month we purchased FAF 34 shares and Google 1 share. We sold Facebook proceeds at $1,000. We currently cash balance is $3,400. So I want you to take a guess of a winner loser. So what do you think the biggest winner is this month in our portfolio? Come on, shout out. I know we have a small Joanne, John, Piero, Megumi,
Vertex.
Vertex, John. Give me some.
FAF, sure.
Which one? What did you say?
FAF.
FAF. Okay. Ding, ding, ding. No, it's Schwab.
What?
Schwab is the biggest winner. We have almost 94% of profit.
Oh,
What about the loser?
I thought you meant over just for the last month. So this is overall. Schwab, that's our biggest winner since we
Oh, yes. Sorry. Overall.
last month.
That's an excellent question. Next time, if I'm going to present again, I'm
Okay.
going to say this month,
Okay.
not the overall. I will do break them, the overall winner, and then we'll do this month winner loser.
Okay.
What do you guys want to know? You wanted to know the overall? Or do you want to know?
So is this
month.
overall or month?
This is overall.
Oh, overall. Really?
Yes. So who do you think the biggest loser
iRobot.
is? Megumi?
What is it called? Is it iRobot?
Yes, iRobot. Megumi, what do you think?
Yeah.
Okay, John?
I don't know.
Yeah, iRobot, yeah.
iRobot. So actually, Amazon, hold on thought. Amazon in dollar amount is the biggest loser. However, we lost only 30%. But iRobot, it is, in percentage wise, it is the biggest loser. So yeah, this is overall in our current portfolio. It's this.
But yeah, but what you said, I thought we bought Facebook. You said we sold Facebook?
We
thought
sold partially Facebook last month.
I thought that was
let me see what
2
he
months
said.
ago. I thought we bought Facebook last month. And Amazon and
No, because we had to trim it because it was.
I know, but I thought that was not last month. I thought that was before that.
That part was handed to me by Reddy. How can we find out? Like iClub?
Go to voting. Yeah.
iClub. Ooh, I hope we got that right. No, I remember you trimmed it.
I know we trimmed it, but I thought then we
Bought
bought more later because it kept falling. But I don't. It could be my memory.
Yeah, or could be we say let's buy more after your report or something. That could be too. Yeah. Why don't we take a look? Maybe somebody can take a look at iClub, what they say. Yeah, that's not doing good. I don't like it. But it's not just our portfolio, I suppose. Not the club, right? Overall, the market is not doing great, right?
No, it's not. Yeah, we bought Facebook. $1,000
did?
for Facebook. Yep. So I think your report is like 2 months behind.
Oh, I apologize because that part it was handed to me. I did not check Reddy's work.
Yeah,
He
so
said we bought FAF, we bought Google, so we bought more.
Facebook.
Oh,
But sell 29 shares of Schwab did not pass, which is good. Maybe I don't know.
yeah.
There was a motion to sell.
Okay, so you checked. Okay, I'm going to update that. Whoa, I hope he didn't sell. He didn't sell Facebook.
Oh dear.
We find out.
I know we trimmed it the time before
Yeah,
that.
we did.
Yeah.
We
Okay.
did. So the benchmark, I'm not very, it's okay. We're doing fine. 16 5 years is 50%, but we need to catch up compared to the benchmark of Vanguard and, so otherwise, why are we not just doing index funds? Because,
Well,
right?
at a minimum, we want to do 15, right? Because that's
Right.
our goal. Yeah.
Yes. Overall, it's not bad, but I'm just saying compared to benchmark, I would like to see better. So hopefully, it takes time. Hopefully, we're catching. This is our club assets. Pretty even, except the Vertex, we have a 17%. Schwab is 10. iRobot is so little. I wish Simina is at his wedding. I would really want to hear what's going on with iRobot. Is there any potential for this company? I know the technology is there. I just don't know what's going on. I think Isla was saying that they are moving out of China and move to somewhere Southeast Asia. Was that she mentioned something like that? So I really want to hear about story about iRobot. What's going on?
Are there only 5 of us online?
Yes, I don't know
Oh.
where's everybody today.
Huh. Okay. All right. That's okay.
Small, I had a typo. So small, we have a 13% small, and we have 45% medium, 10% large, and 27% mega. About almost 6% cash. So we need to increase our small companies size. Median is almost there, and this is that. Portfolio sector, this is by the sector. It looks like a technology is very small, but as we know, some communication services, we have a couple mega companies out there, Disney, Google, Facebook, all in that sector. This is by industry.
Ooh, look at that biotech. It's big. Huh.
We do have 2 biotech companies, do we? BioMarine and Vertex.
Mm-hmm.
Yeah, we have 2. This is it. This is the treasury report.
Okay.
Okay. Any questions for me already? I can follow up if I don't have the answer.
Yeah, I guess we need to maybe adjust for the, we just have to make sure it's correct based on, yeah.
Okay. I will follow up with him. Okay. All right. So John is hand
John's
screen
gonna
to John.
Education piece. Don't
Okay.
have time for John's, so we can make him presenter.
Okay.
Okay. Like I said earlier, I'm going to be doing a very brief book report on Investing Between the Lines by R.J. Rittenhouse, I believe her name is, the author of the book. But you can just Google Investing Between the Lines if you're interested in the book after this report. It's a book / method as well, based on 2 principles. That trust is a necessary foundation for long-term business success, and candor is the language of leaders who choose to be trusted. So what this person does, R.J. Rittenhouse, she and her company read annual report letters by CEOs, and they grade them based on the language that's in them. So they look for, they have an acronym they call FOG. So I'm not sure what it means, but it's in the book, but I can't remember what it means. But it means basically the bad language that you don't want to see a CEO write. And they grade these letters, and the resulting grades help guide their investing decisions. And they have seen positive future price performance in the companies that scored high, and negative future price performance in the companies that scored low. So they scored these companies, and they saw later on that they didn't do too well, or they back tested it. But that's kind of hard to. That's can lead to very much errors in judgment. So better to just grade them in the present and watch what happens to their stock in the future, your company's price in the future, stock price in the future. And the basic framework is used on this infographic and rubric for using their method. There's a capital stewardship is what she cares about. She's a big follower of Warren Buffett. So she's a big believer in Warren Buffett and what he writes about in his annual letters, and she loves his annual letters. And so capital stewardship is what she looks for by the CEO. The left brain system she describes as this strategy up here and accountability over here. She has a graphic here that she kind of likes, but it's strategy and accountability. This is what strategy means. A company's business opportunities and positioning actions, both strategic statements, competitive advantages, and market awareness. You can read that right there. And then accountability related to that, linking goals with results, reporting on financial results, and the company's outlook. So it's providing hard numbers and hard data is what that means. And then the last slide I have is the other parts of it. That's hard to read there, but it's right brain system is what that says right there. Right brain system, because it's got I'm gonna get the background out of there. But so vision and leadership. Back here on this one, vision and leadership are related. Vision is inductive reasoning, emotional intelligence, and intuition, revealing topics like code, corporate purpose, innovative practices and ideas, original vocabulary, and emotional intelligence. Leadership is investor education, corporate problems, mistakes, admitting those, and a worldview of risks and opportunities. And what she calls the spinal system, left brain, right brain, and the spinal system, is stakeholder relationships and candor. So stakeholder relationships, talk about clues that include the elements in the stakeholder. Balancing stakeholder needs, empathy, reporting on what customers want, inscriptions of corporate culture. And then candor is trust cannot, without it, candor, trust cannot grow and flourish. More likely to foster customer loyalty, inspire accountability, and reduce investor turnover. So my basic opinion on the book is that it's good stuff to try to incorporate all these this capital stewardship model into reading CEO letters that they write. It's also, and by its very nature, going to be subjective. You know, it's not like, you know, what's the inventory level of the past 3 years. It's going to be pretty subjective as far as whether you think that's fog, whether you think that's clear and concise and not concise, but clear and revealing and disclosing all the stuff you want to be disclosed and showing leadership. But each of the chapters in the book after the third one, the fourth through the rest of the book, breaks down strategy, vision, candor, relationships, and how she looks through these CEO letters to find that. So this is a way, if you want to adopt the book a little bit, partially at least, to evaluate CEO letters and annual reports and kind of make investment decisions based on that, instead of just looking at those 3 things we have in the SSGs that we have. You know, those 3 things at the bottom of the first page of the SSG. You can use this as well. And that's pretty much all I have. I want to keep it short because we do have a lot of quarterly reports to cover tonight. So anyone have any questions before we move on?
I do, John. Thank you. That's, I think, a book that's worth looking into. Did she give any examples of companies that where they put this into practice and they did an analysis of the is it the stakeholder letter? Is that what that is that gets printed out? Is it the annual report letter?
Yeah, Buffett does one every month. But okay. Jane's going to cover that next month.
Every month?
Not every month, every year.
Okay.
Every year. He writes a letter to the shareholders, to his partners.
So did they give any examples of companies that had good letters and companies that had, you know, didn't meet the criteria?
Sure, there were tons of examples in the book. Yeah, I mean, Enron was in retrospect, it was easier to see that Enron was up to no good looking at their letters, and that's an instance where you know that they screwed up, and you look back at the letter and you say, okay, well, that could tell me that, but it's hard to say whether you would have found that if you looked at it in the present moment. But and she likes Buffett's letters, of course. She likes the Berkshire Hathaway letters by Buffett a lot. Those are the best examples, in her opinion, of this capital stewardship model in the letter. But there's other examples, plenty of other examples she provides in the book of various companies. I can't remember pretty much any of them off the top of my head for Enron and Berkshire Hathaway, but I think HP was in there, both good and bad, in the course of their history. The book's a little bit old. It's about probably 10 years old now, I bet. So.
And like, how do you know that it's one thing to write it, but how do you know the company's actually doing those things? You know, I've worked for companies where the firm vision and all is, mission, all that is very inspiring, but do they actually follow through and do those things, right? I don't know.
Sure. I mean, you could easily fake it on the letter, and although they do that, one thing this accountability is kind of sometimes hard to fake because you provide detail on the misses. Accountability and candor are kind of hard to fake. If they don't provide that, that's a good sign that they're probably not the best in this area. And providing financial results, being honest about mistakes, stuff like that. You can see that in writing. But vision, strategy, leadership. Those are more softer things that are not easier to fake and harder to prove that they're real. I agree.
Yeah. And even on financial results, when you look at when you read through a 10Q, it's all the things, what do you call it? Like all the things that can go wrong, it's like.
Oh yeah, they do have that. They do have that. They're mandated to provide that, I'm pretty sure. You read through those every time you read it, like, wow, it's like the world's going to fall down on this company pretty soon here because we're reading this stuff. But
yeah,
I think they're
Go ahead.
think they're just required to be fully. If they don't disclose all risks, I think they're hit with stuff. I think they're like liable for FCC regulations, so they just go overboard.
Yeah, well, when I read it, you know, it's like any other numbers, it's like, well, you know, these numbers can be affected by all these things. It's like, wow, okay.
Yeah.
So anyway, cool. Thanks for the report, though.
You're welcome.
John, we had a question about if she has an internet site, and I looked up that she has. It's called Rittenhouse Rankings, and they not
right.
Yeah, so it's not necessarily just about her, but it's about how they go ahead and do the. Yeah, it's I think it's RittenhouseRankings.com.
There we go. Yeah.
How
This is
can we
her.
use this
Yeah.
information? How can we use this information for our purpose? How can this help
Well,
us?
when it's annual report time, not the quarterly reports, but if the CEO writes a letter, which they don't always do, you can, if you want to read this book and go through it, you can then evaluate the CEO's letter based on the principles in this book, this infographic that I showed earlier,
And sometimes what happens is we get the annual report, the financials, way before the CEO letter.
Mm-hmm.
Now the letter does.
Yeah. Okay. Yeah.
Yes,
Later.
they
I think
not all companies that writes us annual letter. Sometimes I have noticed some other company I have followed, they just have annual report and they just make, as Roy will say, graphic, like a glossy, just make a glossy paper. There's no annual letters to shareholders at all.
Sure. That's true. Sometimes they don't do one, but sometimes they do. That's what she's looking at.
Some of them do, yeah.
She thinks it's a bad thing if they don't. That's
Yeah.
one of her check marks in the bad category if they don't write one.
Did she offer any kind of checklist?
Yeah, she had some checklists. I can't. They're in the book. I can't recall them right now though. But they're in
Okay. So maybe anybody that wants to use this information for their next, annual report, where they have a shareholders letter, that'd be interesting to see. Okay.
So what does that mean if the company we have, they don't have annual letter? So what does that mean to us? Like,
Well, she wouldn't mark that as a negative.
so she has a
yeah,
database.
but that's just one factor. It's all just one. The whole thing is one factor. The letter, what you think of the letter. If there's no letter, that's a negative. That's just one factor. Of course, the sales and the pre-tax profit and the earnings per share and the price is low and all that stuff is high, then of course you probably want to keep going with the company. But it might be just another factor to consider if you want to. Not required. It's not a better investing tool, obviously.
It's not what we would call BI fundamentals, but there's always, I think, nuances and, like you said, between the lines. This is how we can start researching companies and getting more of a feel of how the company's doing just by how they're communicating, not just by financials.
Right.
Okay.
Okay. Well, we should probably move on. And let me look at the attendees now.
Piero's
Does anyone have? Piero's here. Yes. Does anyone have a sell recommendation they want to make on their stock? Or if not, we can move to Piero for Amazon quarter one. Okay. Well, go ahead, Piero, I guess.
Oh, well, okay.
I'll make Piero presenter.
Okay, make me presenter. Show my screen. Yeah. Okay, so I guess everybody can see me now.
You're
in
on,
iClub?
it looks like you're on my iClub.
Okay, so let me get rid of this. Yeah, I was just checking on that report there with the the returns.
Oh yeah,
Okay.
I see it. You do have a tab actually.
Yeah. Okay.
Yeah.
So I went to Amazon, right? I did the SSG for on BetterInvesting. Anyway, you know, Amazon is a great company and has a beautiful business model, and it ran across a little bit of problems. But anyway, you know, its historical growth rates are like 26%, 213% for earnings. I mean, it's, you know, huge numbers. I said about 15% for both sales and earnings. Some of the other analysts had, you know, very much larger numbers. For example, Yahoo had 40% for earnings. Morningstar had 15.9. That was a little bit more reasonable. Zacks had 26.5, and Value Line had 26.5 for earnings. So I didn't want to go out and risk take that large of a number. So I said 15, just to keep the sales and earnings in line. So 15 for that. All the pre-tax profit, return on equity, debt to capital, it's all in the green, so that's all good. Well,
Hero, can you touch to quarter rather than annual? Or is there any reason why you want to project line as annual?
oh, okay, yeah. Let me try that. Quarter. Okay. Yeah.
Okay.
Well, I also kind of sales detail estimates and earnings per share detail estimates. These are the estimates that the professional analysts are making, right? So I wanted to keep my my sales figures are more or less in line with the professionals, but the earnings I wanted to keep them in line with the sales. I didn't think that, you know, Amazon is going to be able to garner much more earnings than sales, grow them faster. Because one of the problems that I'll talk about is that Amazon, during the pandemic, they saw that, you know, a lot of people were, you know, housebound or told to isolate, and so what they were doing, they were lying on their couch, ordering things online. And so this was kind of an artificial environment. And Amazon saw this and said, oh, great, wonderful, look at this, all these people here, we've got to rebuild out our infrastructure. And that's what they started doing, right? But Amazon is a company, if you think of it as its business model, its margins are very thin. It wants to offer products to its consumers at the lowest price possible. So their share is only going to be marginally higher than what the base cost of that product is. So their margins are very thin. And I didn't think that, you know, huge volumes would allow them to, you know, skim much more these thin margins at a much larger number of our objects or items, and thus grow their earnings per share. But anyway, I kept it at 15. Okay, one of the things I like to do is always compare peers. So I guess we can go to that. And peers, I think.
Okay, Wayfair,
Yeah, I think from my readings now, Shopify is supposed to be a much smaller, quicker competitor. So that would have been interesting if they had it here.
Wait, Shopify, is that the, are they selling stuff on Shopify, or is it just a kind of like a TikTok?
No,
Shopify?
they're selling stuff now. They're kind of following the model that.
I think it's a Spotify. Okay, never
mind. Yeah, they're following the Amazon model. Right, so they're kind of indirectly competing with them. But though Amazon is about 10 times bigger, but Shopify would be a lot more nimble. Anyway, Amazon is doing great on all of these items. Let's say historical sales, historical earnings.
JD.com is a Chinese company.
Ah, okay.
I don't know if they are in, they are in the United States now, I'm not sure.
Yeah,
but in China, it's quite big.
Yeah. Okay, sales. Yeah, so Amazon looking at the pre-tax profit on sales, it's about 5%, like modest, right? Because that you want to keep the eventual cost of each item low. So its margins are very thin. Okay, so return on equity, of debt to capital, they're going to have a little bit of debt, 49.8%. Amazon, what they did, they had an investment of about $7.6 billion in Rivian, which is a electric vehicle manufacturer, and that went down. So it lost a lot of money there. Then they bought MGM for their Amazon Prime. That cost about $8.6 billion. They built out their infrastructure too much. They spent a lot of money doing that. So they got quite a bit of debt. But Amazon is a huge company. I don't think it's going to go down, go out of business anytime soon. Okay, high PE, low PE. Well, we can figure that out later. Okay. Okay, so I'll turn.
I have a comment.
Okay.
So for your earning per share, you know how earning per share you have is 231%? Because the first 3 years you have a negative. So if you cross out the outlier, go to the first page.
Okay,
it won't be, yeah.
First page, okay.
See the earning per share first 3 years on negative 0. Because if you cross out, probably it won't be 213%.
Yeah, 213%. That's right. So that you can cross that one out. Probably cross that one out.
Or you maybe could look at the last.
Yeah, cross this one out as well.
Yeah.
Because it kind of straightens out the graph.
Right.
So, but it's still a huge number, 86%.
Yeah, it's still a huge number.
So, yeah. Okay. So, let's see, valuation results here. I crossed out a number of high PEs, like 197 doesn't make sense. 101 doesn't make sense. 88.5 doesn't make sense. And then on the low side, 121, no, that doesn't make sense. And 63.5, that doesn't make sense on the low side, all right? So when you eliminate those outliers, then the PEs are still fairly high, 71.6, and low is 47.1. I said 52 for the high, and I said 40 for the low. Right. And they still give me figures of about 4,300 for high price, 1,600 for low price. Now, some of these analysts were projecting prices as high as like $5,000 in 5 years. Now, they're kind of, taking the past and just projecting it into the future, but that's kind of risky to do. Okay, so here's that. That even though my prices here give us an upside downside ratio of 4.2 to 1, which is reasonable, which is not a huge number like 15 to 1 or anything. So 4.2 to 1, that seems reasonable.
Can we take a look at low price? I just noticed the SSG made some changes on the low price. That's pretty nice that you can see 52 weeks low. So why did you? So you're using calculated? Can you click that green box? I'm just curious. What did you select for?
Which one? This one here?
Low price.
Low price. Okay. Okay. What did I select? Low PE. Yeah. Yeah. So the low PE with the trailing 12 months earnings per share.
2 weeks low, 21, 20. Okay, 20. So you're using a calculated.
Yeah. Yeah. Well, also the other thing too, it's kind of in line with 20% below the current price. So, the current price was 2,176. That is certainly 20% below that. So everything lines up. The upside down ratio makes sense, 4.2 to 1. Okay, we get rid of this. And then, using the high PE and the low PE, high PE is 14.8%, low PE is 12%. Everything kind of makes sense. It's not distorted one way or the other. Okay, then I wanted to show, I noticed something when I went over to Amazon for, when I went over to Yahoo for Amazon. Now the graph, now the interesting thing here, this is my graph for the technicals, right? Like we're fundamental investors, so we don't really look at technicals. But anyway, it's kind of interesting in observation here. This point here is April the, where is it? That should be April the 28th. Yeah, April the 28th, approximately there, when they announced their first quarter earnings, and the price dropped. Okay, and it dropped from what was here is about 2,800 way down to what's down here. Oh, there's a figure underneath there, that number there, 3:59 p.m. Okay, so it's less than $2,000. Okay, but if you really look at this graph here and think of the technicals, the blue line is a 200-day moving average. The purple line is a 50-day moving average, and the red line is a 20-day moving average. If you look at when the 50-day moving average crossed the blue line, it was right at that point, and that date was January 26th. They pronounced their earnings on April the 28th. April 25th, 27th, 28th. It was about April the 28th. And the 50-day moving average crossed the blue line on January, what we said, January the 25th or something, about 2 months before the actual price drop. It's kind of interesting because, you know, if you look at Amazon, when you look at the statistics, and you look at the statistics over here, and this here, you look down, further down, the short, they changed slightly. A short percentage of float. Where the heck is it?
0.89%. Yeah, it's right there.
Yeah, now it used to be 16% before they announced earnings.
So what does that mean? Because I don't understand. Can you explain to us?
Yeah, usually it's shorts. Shorts are the people, you know, when they sell the stock and then they buy it back later. They don't actually own it. They just borrow it from their broker, sell it at, say, $2,000, and then they promise to buy it back in a month at $1,000, and they pocket the difference. All right. So usually if you're pretty perceptive and you're pretty clever, you can play that game. Because, you know, the downside in the stock market, the downside is zero, but the upside is infinity. So if you kind of sell a stock at $2,000 and you promise to buy it back in a month, but in a month's time, it's not $2,000, it's $3,000, $4,000, $5,000, $6,000, then you can be wiped out. So usually those who are going to play the short game, shorting game, they're usually quite perceptive and they're usually quite good at it. And so this was April.
So what does this company mean to us? Like what?
But we don't play short.
Right.
No.
We don't like when you show us that we did talk about the little bit of the technical. So how can we use this technical analysis to help us to make decisions? Is right now a good price or is right now a good buy? What?
Oh, okay. Well, at this point,
I have a question. This is Joanne. Is that more of an indicator when you looked at that short percentage? Is that and then it's going up? Is that an indicator to you that more people are shorting the stock, expecting it to go down?
Yeah. So, you know, remember, you know, the analyst there, the TV personality, Jim Cramer. Okay, he's always kind of talking about this and that. He says, anytime the shorts get up to about 10%, people are shorting 10% of the stocks, they know something. They watch out, be very careful. So when I saw that the shorts, short percentage of float was 16%, 16% of the Amazon's shares were being shorted. People were selling it because they were thinking they can buy it back cheaper later. They probably know something. They have a hint about something. They know something. Now, you know, inside information is illegal. All information is supposed to be open to the public at the same time, all the time. It's illegal, inside information. But look at what happened here on the on the technicals. The 50-day moving average crossed the 200-day moving average on January the 24th. It's about a month and a half before it actually reported earnings, and it dropped. Somebody knows something. So when we see this, you think, okay, what did they know? Let me look a little bit closer. Let me look a little bit more, dig a little bit more. And there was an article at on my quarterly report. It was written by an analyst from Fool.com. He said the fact that Amazon reported bad earnings on the first quarter should be no surprise to anyone who was following carefully. And these people who when they started selling short and the 50-day moving average crossed the 200-day moving average, they were watching carefully, and they were expecting it to report badly. So when these kind of things happen, dig.
Yeah, I mean that's great. Thank you for the information on the technical analysis and everything in the shorts, and that's great. We should probably move on to another company. If we want to purchase Amazon, I think you recommend to buy it, correct, Piero? We could do that.
Yeah,
during club business.
Yeah, I said a buy, but buy it after June the 6th, because the 20-for-1 split happens, and it'll be selling at about $135 a share. But a little bit beyond that, what I also said is if we're daring, we should short the stock, sell it now, for in about 3 months, 3 quarters, it'll go down, and then buy it back.
Interesting.
Yeah.
Well, we can discuss that. That's something we'll definitely discuss in the end, because that's just about buy or sell, decision. So it's not really describing the company, so to speak. So at this point, I think, thank you, Piero. I wanted to say for everyone that we're going to try to keep both your presentation and any possible questions to 10 minutes.
Yeah.
We do have a lot of reports we want to try to cover. So
Okay.
that's good. We can move on to Bernard with the AF.
Okay.
Yeah, hello, I'm here. Can you hear me? Hello?
Yes, we can hear you.
Yes,
Oh,
Bernard.
Take back the screen.
Okay, so if I'm going to do it, then let me get ready. Damn it, I'm not ready. Let me, oh boy.
Do we go on
That's
to?
okay.
Let's
We can
go
get back.
on while Bernard gets ready.
Yeah, I want to come,
Okay.
I want to get what I need to get. Okay.
Okay, Bernard, we're going to go on to somebody else, and then we'll come back to you. Okay.
Wonderful.
Okay.
Thank you very much.
Okay.
Thank you.
John, why don't you talk about Google?
Yeah, I'm next. I'm going to go with Google. I have
Actually,
my
Ron just made a comment that the Amazon's profit margins are 4%. Google's profit margins are around 30%.
Yeah, but Google's advertising, right?
They're in two different business, I suppose.
sorry, I'm just getting.
Actually, Google this quarter doesn't do well.
In what sense?
In what sense? In earnings?
Okay. All right. So if I get shared my screen, I don't.
Okay. Where are you? Oh, there you are, John. Okay, I'll make you presenter.
Thanks.
Mhm.
Okay. So here's Alphabet, and this is my last SSG's growth was 15, and my EPS was 20. I got some feedback that I should probably just use the preferred procedure, so that's what I used this time. I kept sales at 15.
Oh, damn.
Year-over-year sales growth is 23% for most recent quarter, 37.4 trailing 4 quarters. Pre-tax profit down, your EPS growth down, but trailing 4 quarters it's up significantly. So current PE, I made this a while ago. I'm not sure what the current PE is right now, but 20.9, and average PE 29.6 for a relative PE of 0.71. And this is not correct, or from what I just did today to try to give to Reddy. I believe it's 3.4 my SSG. So, yeah. So I just kept it the same for forecast.
I love
And
the graph.
forecast
Beautiful.
sales. And I changed this one to 10.9 because I just used preferred procedure as I got the feedback last time to just do that instead of basing it off historical. So that's that. I do want some help, I guess, with my for the high for this forecasted high price. I just used the average PE. Now maybe you want to go lower than that, but that's where that came from. And forecasted low price, I just picked a low price. That's what I need the most help on, is picking this low price. I'm not sure. I know there's a lot of options here, but I'm not sure what.
Sorry, can you cross out 2021? Because 2021 is over 114, the high PE.
Okay, got it.
112. And then your 2017 is only 80. You should cross out that too. On column C, the.
See.
Oh wait, sorry, I'm looking the wrong. Never
Yeah,
mind.
it's for sure. Yeah.
Sorry, I'm looking at the high PE there.
This-
59. Wait, why did you?
Okay.
Oh, I see what you're saying. Should be fine. Sorry, I looked the wrong column. My apology. I looked the wrong column.
Okay. Do you want to cross out
Yeah,
2017
I would.
essentially?
20.9, yes.
Okay.
Because on your
Okay.
graph, that yes was wrong too.
All right. Okay.
No, use that's average. You want to use the high.
Use the high? All right. All right. And then this one, like I said, I was hoping to get some help on here. Now there's a lot of options here, but this seems too low to me. And this one is a bunch of different.
Okay. First, you want to change the earning per share TTM. You want to use TTM 110.56. You just go ahead and manual update the yellow box. Just click that. It will automatically. Yeah, there you go.
Okay.
So what would you like to use? What's the current? What's the 26.52 weeks low?
So is that gonna give me 26.09? Because that doesn't even make any sense, right? That's
52 weeks low, 22.
Price. It's above the current price.
Yeah, that's
So-
doesn't make sense. So what's the current price right now? You can do 20%. See what happens.
Maybe a little bit out of date, but I believe it's invalid. I'll go back to for the time being. I'll go back to 1500.
It's on the top. It's on the top of a graph. Go up.
What do you mean?
That is May 13th. So 2330.
80%.
May 13th. That's pretty close. That's Friday. Yeah.
Yeah. So 1864.
What's that?
Low price. You want to use 80%, right?
Okay.
So 1864.
Okay.
Jay, should we change the calculation? So I don't know where that, the 23.6 looks like it's the average PE.
Yeah.
Let's
18.8.
low PE, 18.
Okay. 18.8.
Yeah.
See what happens.
Okay. All right. Great. That makes a lot more sense. So what is?
No, that's
Okay,
the
there we
1110
go.
is correct. Yeah.
That's really close to. I mean,
Yeah,
that's gonna
close to hold, isn't it?
upside
Yeah.
downside. Yeah.
Right.
Not
Yes.
upside down. So
Oh, that's
I figured
auto.
the market
That's too
sucks
much.
right now. Obviously, the market is terrible as far as the price action goes. This company's doing well as far as their financial results go and their prospects go. So I figured just give a price that's somewhat reasonable fall, because it might fall because the market sucks. But that's that.
I
Go back.
fall to one's too much.
Go back to
Yeah.
your 80%. The 8.
Go back to 80%. I agree. 1864. You could 1800 or something. 1864.
Okay. Okay.
Slightly better.
All right.
Still, it's very optimistic.
Yeah. Maybe it might want to change. I mean, speaking on this though, the debt's pretty low. I don't care about 10.1.
Do you want to change your high PE to lower the high PE to like last year's 2021 is 27. Do you want to just try 27? See what does that give you?
Okay. Yeah.
Slightly better. You had before you had 3.621. I think when
Yeah.
you used the low P, did you use, oh, sorry, low P, low price was like a
Mm-hmm.
1600, but I don't know how did you get that.
I just picked something that it was totally kind of gut based. It wasn't really based
Oh,
on
so it's
anything.
about 2021 low stock price. Look, 1700, 1699, 2021.
Well, like it says right here, this thing. Yeah. I
Yeah,
mean, you can pick
the
that one.
1600.
That
Yeah, you
one.
can
But
try that. See, you say 1700 or something. I don't know.
You think it's going to go that
yeah.
low?
I don't know. I don't know. I'm not sure.
They keep tightening. The Fed, that is. Don't fight the Fed. They're tightening. So they're saying they are. And they are.
You know, honestly, for me, for both Amazon and Google, what I want to know is like what Pierre talking about business models. How are they? Are they continue just doing the ads? Like how
Yeah.
does Google? What's
I
their
think
plan
that's.
in their business model? Like a continue just pushing.
Well, here's the revenue, which is, they make a lot of net profit as well, but the revenue is basically from Google search is dominating their revenue. This is their Google advertising and Google search is there. YouTube makes only that much. I figured YouTube would make a lot more than that 6.6 billion, 6.8 billion. But and then Google Network makes 8.1 billion. But Google search makes 39.6 billion in the past 3 months compared to 3 months 2021. You know, so it's
Year
just
ago.
it's just a cash cow as far as the revenue goes, at least. There are other bets is where they're trying to develop, you know, driverless cars and stuff like that, autonomous vehicles, and they have a bunch of other bets, but those are not making money yet.
Other than China, who is not using Google? Looking the location, geography location, you know, right here, go up a little bit.
Yeah,
You
right
have
here, right here.
Russia, right? Didn't Russia?
Oh, Russia does not use. Okay.
Or am I
Russia's
Did we
not part of it.
deplatform Russia?
Yeah,
Did they
yeah.
deplatform Russia?
Or maybe that was, well, I know Facebook did get out.
I know for sure that in China, they don't use Google. They cannot use Google.
Yes.
Gmail.
It's not the Great Firewall of China.
Who else? Yeah. Who else not using it? APAC,
Well,
EMEA.
a lot of that developing world is not. They're trying to bring the internet to the developing world so that they can use Google and Facebook and so on and so forth. You know, but that's just
Does
a
India
matter.
use Russia or does India use Google? They do probably. I'm just curious. So what's their? They continue just working on ads, search engine. Just curious.
Okay. Well, I don't know off the top of my head without reading through this and Googling various things, looking at Zeeking Alpha, but I can look at that while we're doing the rest of the reports if you want. But I recommended, based on our portfolio, that we buy $1,000 worth. If that's, I guess we've in the past we purchased fractional shares. They're splitting their stock pretty soon, I think in June. So we could buy a couple shares after the split, legitimately, you know, so to speak. But that's just my recommendation, though, and it could be not followed, obviously. So any other questions, or should we move on to Bernard?
How much money do we have to spend?
Oh,
Does anyone know?
Jay, was it
3,000? 3,000, I think.
1,000?
3,000.
We have because we bought like
I know.
$4,000 worth of stocks last. Because if we don't have any money to buy, then I'm just, you know, wondering.
I'm quickly checking. That's already.
If you don't have much money to buy, I would say probably buy a small company if we can.
$3,400.
Oh, okay.
Bernard, ready?
Yes,
Okay.
I think so. I was. Maybe I lost it again. Damn, I had it. Just a minute.
Are you
Okay.
Okay, I'm going to make you presenter, Bernard.
Okay. Now, okay, guys, I got it here. Here I have if you can just take my screen and show it, and we'll walk through it.
Okay.
Or maybe the presenter, show my screen, yes.
Okay. You
Okay,
got, okay. We see.
so
See.
I'm starting with FAF, and I'm using the core procedure. And you can see the first question is, how are the sales? Well, the sales is pretty damn good. And down here is the rest of the team of the competitors. They're not so hot. And then then we go to forecast earnings. And here again, the trend is up. A little bit of boo-boo in the last one, but I project the sales would go up about 6%. Continuing, I'm projecting that the past will continue into the future, more or less. Okay, and now I'll go to the next one, earnings. And you'll see the earnings are going up, and I project from the history that the earnings will, I project about 16%. So that you can see I'm continuing the past into the future with earnings about 16%. Okay, and then I go next, high price. Well, I look here at the PEs of the past, and it averages 11.7 for high PE, which is fabulous in a way because it's a low price. So I put 11 in, I update my study. And okay, so that was the high price forecast. Now I'm going to forecast the low price. And I look here and I see
Bernard,
yes.
can you go back down to your forecast high price?
Sure, we'll go back, forecast high price right there.
So you have 111. Should the PE be low? Scroll down.
Okay, the PE is 11.7. That's averaging the last 5 years.
So it says enter your average high PE forecast.
Yeah, and I picked 11, trying to be a little bit conservative because
you have 111. Can you just delete one of the ones there? You have 111.
Oh, I do? Oh my goodness, that's terrible. No, it is. So I just want to be 11.
Okay, just
let me see if I can delete it. I'm trying to. Damn, I have trouble. Let me see if I can do it.
Just highlight that whole thing and delete it. Yeah.
Okay, I'm going to push the delete button. Okay, now I'll put in 11. Thank you for catching that. I didn't know I'd made that terrible mistake.
That's okay.
11, and then I'll say update my study.
Perfect.
And now it says 11. Okay, hallelujah. And now we go on to the next step here in this using the core procedure. And I forecast the low price. And you can see it's been averaging about 7.2 for the last 5 years. So I put in 6 as a low price estimate, and I update the study. And so then I go on to the next, assess the stock price, forecast high price, and you can see the current price and the low price are about the same. So I'm thinking it's coming out of buy. 5.7 to 10. Forecast high price 257. Forecast low price 55. But it's down here. The price, current price, is down here in the buy zone.
Bernard, you don't think that the interest rates are going to slow things down for them?
A little bit, but on the other hand, they have a bank. And when interest rates go up, the return on their loans increases. So from the earnings call, they weren't greatly optimistic, but they were saying, look at interest rates going up. That's not an insurmountable problem for us because we do own a bank, and our loans that we make will increasingly give us money, millions of dollars. So that's what in the conversation, that's what they said.
Okay.
I listened to the earnings call. I wish I could play the whole thing for you guys, but because yeah.
Okay, another question, Bernard, another question. You have your earnings, okay, your sales growth, what was your projected sales growth?
It was about 5 or 6%. Let's see, forecast low, high price. Let me go back and we can look. Low price, high price, back, low price. Well, come on, back. Sales. You want me to know sales or earnings?
So what did you have for projected sales? 6%? Yeah.
Yes.
And then, but your earnings you had is like double digits, right? How are they going to have higher that?
Okay, it's a good question. Now let me go to the earnings.
Okay.
And it's 16.
Yeah.
Well, so yeah, I don't know how. That's a good question, actually, very good question, because in the long term, your earnings can't be more than your sales.
So, but I think, they were trying to get efficiencies with the automation. Remember how they were, that was one of
They're doing that. That's something they're doing. Yes.
So I was wondering if that's part of why their earnings are, because they're gaining those efficiencies. But I don't know if they can sustain that. I think the 16% might be aggressive.
Yeah, that you might be right. I'm not sure.
Okay.
But here's where I am, folks. Damn it, this is a company that's increasing sales, increasing earnings, and the PE is very low. And so there's a good chance that it will make money for us. I've bought a lot of it myself, which I could be wrong. And by the way, I appreciate you cut me on that 111. I had never known I put in that figure. It was 11 and I put in a 111. Yeah.
Okay. All right.
So it came, and now if I go back, I can convert this back to the plus. Okay, I just click on plus, and then we can go down to value and return. And then here we see it's in the buy zone. And they're saying it's, oh my God, 76 to 1.
Yeah, something's off, Bernard, because it shouldn't be, that's not, that's like way out of the scale. Let's go back.
Yes. But I don't know what's off.
Okay, let's look at how you selected your low price.
Okay. Now, can I do that in plus or do I have to go back to core?
I think, okay, so see how it says for your high price, 257. I think that's aggressive. So let's go back and check your earnings per share, the front page.
Okay, earnings per share. Now, when I go to I could do it in core. I know core better.
Do core.
Just go click the first tab, analyze growth and the quality. Go one to the left, one more tab, one more time.
Yep, right
there. Yep, there you go.
Okay.
Going down a little bit. Yeah. The graph. Okay.
Here's something
I see. Okay.
Let's not do 16 for the
Right.
earnings. Project forecasted earnings.
Okay, can you click on the second green box that says 16? Can you just click that?
Hold down.
Second green box. Okay, wait.
Yeah.
16.
16? Did you see the green box?
No. On the right.
Earning per share. Second. You know how you have a 16? Your forecast. Your first forecast is 6%. Your second.
Click there.
Go ahead and click that one.
Okay, I click 16.
There we go.
And we're going to change that to what? I'm
I
not
will
sure.
say align it. Just go ahead and 6.6. So your earnings follows your sales.
Put 6 in the
So 6 for now.
instead of
6 right here?
yeah,
Yes.
16.
Okay. 6.
Update
Okay.
study.
And then I'll say update study.
Yes.
Okay.
And then go back to the second
Much
tab.
better.
Now here's the problem, folks. I noticed there is amount of debt, 23% debt.
It's
But-
not a lot.
Yeah,
Uh-huh.
but it's a red thing, so I want to point it out.
There right
But-
now, the 52-week slow. Okay. Can you go to the valuation and return, the second tab?
Okay, valuation return,
Yep.
and we get down here.
Still
Still
is quite
40.
significant. Can you go
40,
up? 40, yeah. Can you go up a little bit? So you have 15, 15, 15, pretty consistent. 7. I would not give high P as 11.
oh,
I probably will give maybe align with 2021, just be conservative. Can you change to 7.2
So
high PE?
so what tab I got to be?
Okay.
Right?
This tab. Right now you're at the correct tab. Can you
Okay.
click forecasted high price, the 164? Click that
Okay.
box. Yeah.
Okay,
Click. Not
okay.
highlight. Yeah. Click that. Double click.
No, you have to move it over.
you're gonna
Yeah.
open the box.
Oh, there you go. Can you change that to what was that? So 2021 7.2. Can you just change to 7.2?
Right here, okay.
Yes.
Let me see if I find the 0.
You can just do
I mean,
7's fine too.
It's fine. Just
Okay, that's fine. I'll leave it
7's
7.
okay. Yeah, update. That's not going to make a difference. A little bit better. Okay, and then let's see. 52 weeks low is a 57.
well, let's look at the forecasted low price.
Yeah.
Okay,
the
can
low
you go
price.
up? Look at the trend.
Nope. No.
So I will cross out 9.7 as a 10 because you look do you guys agree for the low PE? Would you cross out 9.7 and 10?
No, what pay? What do oh, here it
Low
says
price is
10
too close to the closing price.
That's
the
right.
problem.
Yeah, it should be 20% below.
Okay,
Yeah,
why don't we
it's
just
22.5.
calculate 20% below? So 58 times. So why do we use a 46 instead?
So
And where do I put that?
Okay, go ahead and double click your low price, 55.7. Selected the forecast low price, double click that.
Okay.
Okay, on the first bullet button, your low stock price forecast, the 50.5, yeah, all the way to the top.
the very
First,
row, the
very first,
Okay, 56.7,
55.7. Yeah, go ahead and click that.
on that box.
Okay.
Try enter 46.4.
Okay. No, I have to admit, I don't know what I'm doing, but
I tell you a
lis-
second.
I'm
tell
listening
you.
to you guys because I think you know a lot more than me. So let's see.
Just say $46. Good enough.
46 because I can't find the period in my.
That's okay. No worries.
Keyboard, the dots don't show very
See,
good.
it's much better,
Okay.
right?
Okay.
It's better.
The reason why we picked that, Bernard, is it's because it's 80% of the current price.
Oh,
So that's how we picked the forecasted low price.
So now let's take a look at the dividends too. Can you going down more? Going down more? Okay. Payout ratio. Click that green box, payout
Alright.
ratio.
It says 30. You see where it says 30 in that box?
oh yeah.
Okay. Yeah. Double click that.
Pardon me.
Okay, so it is
Okay.
30. 5-year average. That one's okay.
Okay.
Although
I'll close that.
it looks like
Yeah.
it's coming down.
Yeah. So my question also to you, so this is the insurance company, right?
No, it's
It's a title company and an
Oh, title
insurance
company and insurance company.
And they're telling me that refinancing is slowing down,
Mm-hmm.
but sales of houses is going up. And when they sell a property, it's more profitable for them than when somebody refinances. But they're not real clear about the volumes they expect or anything. I mean, they weren't pessimistic, but it's kind of hard to know how much the sales are going to be of houses. So, but I'm figuring, and I could be wrong, but it's a reasonable price, and I think it pays 3.5% dividend, right? No,
You can go all the way up.
Scroll to the
Go all
scroll to the
Yeah. Yeah, 3.5 actually, we can see on the yield. You can go all the way up
oh 3.5.
to
Yeah.
see the trend too.
I don't.
Right there.
There you go. The payout ratio and the high yield.
Okay. Where do you see all that? I just see a bunch of numbers.
Column G and H. Do you see column G and H right there?
Oh yeah, G and H, yes.
Payout and percent yield. High yield.
Oh boy, very good. And the payout ratio is not very high, and the yield is pretty good. Yeah.
Oh, should we also take a look at the trend, the quarterly trend for this company?
Okay, now how do we do this?
Okay, can you go all the way? Okay, quarterly.
Quarterly. Yeah,
There you go.
okay.
And then going down.
Now, oh boy, earnings per share. What do we need to look?
I always look at the last 3 columns. The quarter,
Okay.
trailing 4 quarters.
Trailing 4 quarters.
See if it's increasing.
Yeah, kind of. Oh, it depends. So this quarter. Wait, sorry. They have not pushed out their first quarter yet.
Yeah, there's
They
still,
only have a December 21st.
yeah, December.
Yeah.
Now I learned when I listened to the earnings call, the first quarter is always their worst quarter. And then as the year goes on, things get better. But the first quarter is always a low quarter.
Did they say why?
No, I mean, they may have, but I didn't understand.
Not many home sales. Remember, they make their money on home sales when people buy homes. So there's not many home sales during the first quarter usually because people have spent a lot of money in December. So most home sales are spring and summer.
Spring, summer. Okay.
Fall.
Okay, spring and summer.
So routinely, their first quarter is their worst. That's what they told me.
I see. Okay. That
Well,
makes
they
sense.
have reported their first quarter numbers though. I don't know why they're not in
Yeah,
why
same
they're
as
not
the
on this
company
issue.
I
They
follow.
actually reported already.
Right.
Yeah.
So I don't know.
Ala, do you have anything to add for this company?
Well, I think the thing we have to remember is that they do title searches. That's what they primarily make their money on. So that requires people to be mostly buying older homes, selling and buying older homes. So if that gets pulled down some by higher interest rates, they're not going to make as much money. So a lot of what they've been making is based on, the increased sales that have happened from second half of 20 and through 21. So now we have this trying to tame inflation thing and interest rates are going up. So everybody who didn't, refinance their home or buy a home or whatever up to this point, they're probably going to think twice about it. And then with home prices, with the new home prices are going up so much. And also existing home prices are going up a lot too. So that's going to stop people a little bit too. So there are going to be some fewer sales, I think, going forward. So they may make a little less money. And they're not a big growing company. It's not. It's not. I think that PE reflects that the market in general doesn't really value these types of companies in the same way they value some others.
Yes. But here's another thing. Let me mention this. I found this in my report, not in my stock selection guide, but in my report. I noticed when I went to Amazon and looked up insider sales and purchases, and in the last 6 months, the insiders of this company have purchased 7.7% of their own shares. they are buying, the people that own this company are buying their own shares. They bought in the last 6 months 7.7% of the insiders of the shares of the company as their own personal investments. So that must show that
That's pretty good. Yeah, but
That's a
I want to
lot.
say that the I'm looking at the SSG, and they have Morningstar has pushed out their earnings for the first quarter, and their trailing 4 quarters numbers are coming down significantly for the last
Oh.
quarter.
So
So their sales, their trailing 4 quarter change in sales is 19.9% as opposed to 30. And their pre-tax profit change is 26.7 as opposed to 77. And their EPS change in sales trailing 4 quarters is 28.5 as opposed to 80.
but isn't that the first quarter?
That's the first quarter report, yes.
Where it's always kind of lower.
It's worse than yeah,
than the-
definitely. But I'm just saying, but it's also, this is, just showing the trend.
Yeah, it's trending down.
Yeah.
Okay.
And again, that's just the result of people not buying homes as fast as they were last year.
Yeah.
Okay.
Very good.
All right.
Yes.
Hey, thank you, Bernard, very much. We should probably move on though to the next company. And Isla, were you recommending a hold, a buy, or a sell for your company?
Well, so it's BioMRN is an interesting company. They so I'm having a hard time with it because they have been in business since 1999, but they have yet to have one complete year of positive earnings. They've had quarters of positive earnings, but they've failed up to this point to have one entire fiscal year, calendar year of positive earnings. They did have positive earnings this first quarter, but their operating cash and free cash flow is still negative. The company is looking forward to becoming earnings positive at some point this year.
Isla,
So,
I'm going to make you center. I'm making it. Do you have something to show us?
let me. No, that's not what I can show you. Hold on 1 second. Oh, that didn't work. And that didn't work. Oh, my machine. Okay, my machine is acting up. Hold on a sec. It's acting up.
You want me to bring up your SSG? You want me to go?
Yeah, would you please? Would you please? Because I can't get this to work right. They're having a little trouble here.
So things you worked in healthcare industry. What do you think about their business?
Well, I do know that research and development of medications is a very long and very costly business, and that it can take up to 15 years from concept to commercialization of a medication before you start to make any money. It can take that long because, there are lots of different setbacks. BioMRN and most of the biotech companies have chosen at this point to concentrate on conditions that have very small patient populations. Most of them are not dealing with cancer and heart disease, which are the major killers in this country, or even infectious disease for that fact. But so they're dealing with things that have, very much smaller patient populations. So even when they come up with a medication that's successful, the number of people that can use it is small compared to the number of people who would use a cancer medication or an asthma medication or a heart medication. Or even infectious disease medication. So BioMRN deals with phenylketonuria, and they deal with some pretty, unless you have a child that is born with that condition, people just don't know what it is. And they deal with some kinds of diseases that most people are not connected with. And they have like maybe 2,000 or 3,000 people in this country who would be eligible to use whatever PKU medication that they have. So it's really difficult, I think, for this company to think at some point they're going to make a lot of money. But they do have a couple of drugs in their pipeline. One is for hemophilia A, which is, has a few more people. That has several tens of thousands of people that have hemophilia A. And hemophilia is the kind of thing that once you have it, you never get rid of it, you don't cure it. It's something that you have to continue to treat throughout the lifetime. So once you get a medication that works for that, you will have that person taking that medication for their lifetime. The problem right now is that 2 years in 20, the FDA was supposed to review and come up with a recommendation. The FDA chose to ask BMRN to please go back and redo some of their clinical studies and give them 2 more years of information. So this year they're supposed to present again to the FDA for hemophilia A, and all of the analysts think that's their real blockbuster drug at this point, but they don't know at this point what the FDA is going to do, and they're probably not going to get a decision from the FDA before the second half of this year. So it is a matter of whether or not whoever happens to own this company has a lot of faith in it, in whether or not they're going to be able to generate money. So they have several different drugs that take care of this phenylketonuria situation, which is something in this country, every single baby is tested for phenylketonuria immediately after birth, because it's something that can be mitigated. Can't be cured, but they can mitigate it if they find it early, and really limits the damage. However, they were first to market with really successful PKU drugs, but now there are generics. So all of the drugs that have been making money for them over the last 3 or 4 years, even though, again, they weren't able to string together 4 quarters of positive earnings. The drugs that were making money for them, they're not making that money off of them anymore because there are generics on the market that cost less. So right now they're kind of in a holding pattern, waiting for a couple of other drugs to get FDA review and approval. So it's really up to whoever owns this, whether or not they have enough faith that the company is going to finally turn the corner and get to earnings positivity and maybe free cash flow positivity. Their debt is not that much. Their debt is about 20%. So my EPS forecast for 5 years based on their negative EPS previously ended up being 53 cents, 53 cents per share, which sounds pretty awful. Their first quarter EPS was 63 cents, which is, exceeds that. However, their trailing 12 months EPS is only 18 cents. So again, we're still waiting for the FDA to decide whether or not they're going to give their approval on 2 of their pipeline drugs, one of them being for hemophilia A and the other one being for achondroplasia. And there are more people who have achondroplasia, and that's kind of a situation that is linked to dwarfism. And the hemophilia A, of course, is about a situation dealing with blood and bleeding. And so their populations are slightly larger than the populations for PKU, but they're not the huge populations of people, for example, that have asthma or heart disease, liver disease, cancer, anything like that. So it's questionable to me whether or not they'll ever make lots and lots of money. I will say that most analysts do not think that their sales forecast is going to be spectacularly good, but they have more faith that they are going to somehow make more money and that their earnings will be much better. Their earnings will be much higher, for example, than their sales. So it's kind of up to whether anybody wants to stick with it, for another however many years until they actually gain this earnings positivity.
Okay, great. Thank you
I know.
for your report.
It's not very encouraging. I'm sorry about that. Yeah. So it's either in my brain, it's either a hold or a sell. I don't personally own it, so I can't really comment on it in that way. But I would think that the person who does own it, how long, depends, I guess, on how long they have owned it, how much faith have they put into this, how long have they held on to it. for them to determine if they want to hang on, because maybe they're going to turn the corner to positivity this year. And I'm sure they've heard that. Whoever owns it, I'm sure they've heard that for the past 3 or 4 years.
And the reason why we bought this stock is not that it met BI fundamentals, but that it was a speculative stock. We were going to start looking at, more speculative stocks and try to track.
How long ago did we buy? How long ago was it put in the portfolio?
I'm not sure. Does
Very
anybody
long.
have my iClub up?
Maybe a year. I do.
It hasn't been 2 years, I don't think.
Oh, okay.
February the 5th, 21.
21.
21. Okay.
A little over a year.
Yeah.
So, okay. So given that it's, we've had it for a year, it's not unreasonable, I think, to try to maybe hold on to for the next 2, maybe 3 or 4 quarters and see how they do in terms of turning that corner to positivity.
Okay.
Isla.
It's not like we've had it for 10 years or something and you just get sick of it. But, I think, hanging on for a little while longer is probably not going to be awful.
Isla.
Uh-huh.
Isla.
Yes, Piero.
Okay. Listen, one of the things I always heard about small pharmaceutical companies is if they have an interesting drug or an interesting drugs in a pipeline, the big pharmaceutical companies will come over and buy them out.
That's always a possibility.
Fine. Yeah, that's the gamble.
Yeah. They don't own up to anybody. Nobody owns up to being interested in buying them.
Oh.
That doesn't mean there isn't any interest, but it's not public.
And they're not small, they're a medium-sized company.
Yeah, they're somebody who wants to buy them is going to have to pay some money for them.
Huh.
Is that
Because
the
they've
only
been out there for a
speculative
long time.
stock we have? Is BioMarin? Or is Vertex also?
Vertex is earnings positive.
Yeah, Vertex.
That's also biotech, right?
Yeah, Vertex is earnings positive, and they've been earnings positive for a while, so they're not quite in the same position.
I don't think BioMarin does have a value line though, right?
Yes.
Okay.
And okay, so wait, hold on. I know this isn't showing on your screen because I can't get this to work right properly. But let me just give you this bit of information. So Yahoo thinks that their earnings per share forecast is 72%. Value Line, their earnings per share forecast future 51%. Zacks thinks their earnings per share is 50%. Value Line thinks their sales is only 8.5%. So, analysts think that they will make money. Their earnings will zip up considerably if they get this FDA approval, particularly for the hemophilia A and the achondroplasia drugs. But nobody seems to think that their sales are going to do that well. Morningstar thinks their sales will be about their 5-year sales earnings will be about 17% annually.
Yeah. So Value Line says these timely shares also hold speculative appeal for long-term investors.
Mm-hmm.
So
they do say capital appreciation is above average for the 2025 to 27 time frame.
What do they say up here?
So it's not,
Okay.
I did not know how long we had held them. Like I said, if we had held them for 10 years, you might be, just tired of it and say, chuck it. But since it's only 1 year, I think we can have a little more faith in it.
Okay.
We can discuss that further.
I
We'll
think
need
our
to do a
club's
site
only
one to
5
checklist if we're going to sell. So we'll need to do that checklist anyway if we're going to sell, I believe, right? So we can move on if that's okay with everyone.
Okay.
Yeah, I feel like Jane's not here to defend this company. I feel like she really liked this company.
Yeah.
Or maybe it was the Vertex, other one, I don't know.
Both. Likes both.
Oh, she likes both. Yeah.
Hey, Megumi, we didn't leave you much time, but if you could cover Facebook relatively quickly.
Yeah, no worries. There's not much to report. So the price today was just under 200. I guess I could share. Oh yeah, I'll show my PERT report. I did this report on the 6th of May, but it's just under 200 today. The they beat earnings. Earnings was 272 versus analyst prediction was 254. They did miss revenues though, not by much. Analyst was 28.3 and they had 27.9 billion. As far as my SSG, the last one I had sales projection at 19. I lowered it to 14, and you can see to the right, the analyst numbers are 12.4, 17, 16 and a half, 17. So it's a little, it's conservative compared to the analysts. And the earnings, I'd also put 14, and the analyst numbers are 13.7, 16, 17.8. This one's low, 5 years, 7.53 by Yahoo, 18.6, 13.6. So I think the important thing is actually down here, you know, Facebook, they knew this was going to happen. They said that in the last earnings call, that their short-term revenues are going to fall because they're investing for the long term. The headwinds, you know, everything's all video now, so they're making that transition. They feel confident they can make that transition. You know, everybody knows what's happening in Ukraine. It was not expected, but that's also affecting their business. The iOS platform change in 2021, they're still dealing with that. And they said they expect to continue dealing with that into 2022. And this year, for some reason, the exchange rate has affected them more than previous years, although it's sort of mentioned in every quarterly earnings report. So the guidance, again, is they're building for the long term. They're going to continue to invest in the Reality Labs. If you remember, they split between Family of Apps and Reality Labs for their finances. So they anticipate Q2 revenue will be negatively affected by certain macroeconomic conditions, but also total expenses will be lower. Almost all the analysts have a favorable outlook long term. So my recommendation is to buy if you have the money, or hold based on where our portfolio is as far as how much money we have and what the balance of, you know, between size and sector holdings. I guess if I owned it, I would buy, because I do think in the long term, they're going to do well.
Thank you.
Yep.
Any questions from Megumi or comments on Facebook or beta platforms?
No.
Okay.
We're good.
Great. I mean, I think we should probably end there. I know that Joanne and Jay have stuff they can present, but you're both holds, right? And we're kind of out of time.
Okay.
Almost.
Okay.
So, so we'll go on to in my agenda the open mic for guest questions and comments, right?
Should I?
Okay, great.
Go ahead. So, do you know this?
Yeah, go ahead and call on. Yeah.
Okay. Brian, I'm unmuting you. Hi, Brian. Any
Good evening.
Comments?
Good evening, Brian.
I don't have any questions. I really enjoyed the book review. That something to think about, and the rest of the conversation was good. Thanks a lot.
Thank you, Brian. Charlotte.
Thanks, Brian.
Hi, Charlotte. You're self-muted. Okay. We'll leave you open when you come on. Joanne, you're self-muted. Actually, I have two of you. Joanne, I'm not sure if you have a microphone. Okay. Oh, there you are. Hi, Joanne.
There we go.
Any questions or comments?
Maybe she doesn't have a microphone. Maybe just type up the.
In case your speaker's not on. Okay, we'll leave you open. If you can figure your speaker out, let us know. Joel. Hi, Joel.
I no questions. Just interested in in the procedure for the international meeting. I'm interested in possibly joining in the future, so I'm attending a couple of meetings.
Okay. So did you get the FAQ on how to become a member?
Yes, I haven't gone through it. I did look at, I did see that it's a handout,
Okay.
or it's one of the.
That kind of gives the criteria. So let us know once you've attended when you would like to do a stock study. Join a stock study
I'm
group.
sorry, you were fading in and out. I didn't hear everything.
Let us know after you've attended 2 consecutive meetings and would like to join a stock study group.
Okay, sounds good.
Thank you, Joel.
Oh, I did have a question. Since the money to purchase stocks, I mean, it's all virtual. How do you determine how much money you have to buy a stock?
I believe every month we contribute $100 per member. It's all virtual though. It's not real money. We just assign $100 per person.
I see. Okay.
That's how we had come up with the money to buy virtual stock, stocks.
Okay.
Okay. Ron, I have you on it. Logged on too. Hi, Ron.
Hi. No, I'm all good.
You all good? Any
Yeah.
comments?
Well, G, I sent you my Google PowerPoint. I don't know if you received it in the beginning of the month.
Yes, I do. Thank you, Ron.
That's how to look at all the items. So Google is so undervalued right now. You should be buying it. Sell your car, sell your house, sell your husband.
No, we're not doing that. We're not doing that. We might buy some, but we're not selling the car in the house.
It's the undervalued stock. So it's really, take a look at that PowerPoint I gave you.
Meeting.
I will. Thank you.
Okay.
Can we
Thank you.
post that on our drive or to share with the members?
Yes.
Okay.
Go ahead and share. If you have questions, just send your questions to G. If he can send it to me and I'll answer them. But because I look at net profit margin, operating margin, and and I look at the discounted cash flow, how much the Google is really worth right now at today's price. And so go ahead, take a look at that PowerPoint and read through it. And it's an excellent company.
Thank you, Ron.
Okay.
Stephen, you're self-muted. If you would like to comment or ask a question, unmute yourself. Did we ever hear from Joanne? We didn't. Joanne, I have.
Hi, how are you?
Hi.
There's Steven.
Oh, is this Stephen? Hi, Stephen.
Yeah, I just saw how to unmute. Yeah, I don't really have any major questions. I was just basically seeing how the SSG automated, the electronic form works, and was watching that. And then also the presentation in the beginning about short selling and stuff like that. I know for a fact that the NAIC does not do anything with short selling and stuff like that. We're happy to get, the numbers right, and, dealing with short selling, that definitely adds another layer of complexity.
Right.
Got to keep it simple.
Yeah. Thank you, Stephen.
But nice presentation, everyone.
Thank you. Appreciate
it. Thank
you. So I didn't think.
Thanks again.
We hear from Charlotte or Joanne? No. Okay. So there's Joanne's on, but I can't.
Actually, I fixed my audio, so can you all hear me?
Charlotte.
Charlotte?
Charlotte.
Oh, hi, Charlotte.
Hi, this is my first meeting, and I joined a bit late because I had another call earlier. So I've been mostly like index investor, but I'm interested in learning about individual stock names. So I look forward to future meetings, and I just wondering how you screen the stocks and how did you come up with these ideas? Do you do research together, or as an individual come up with ideas, or maybe we can catch up one-on-one after.
Does somebody want to take that question?
You
Jay?
can go ahead, Joanne.
No, Jay, you answer. You don't want to answer? Okay. So we do have a whole process, actually. We use online screening tools, and we actually initially start out with looking at our portfolio, because what our aim is to have a balanced portfolio, meaning it's not only sectors, but it's by size and industry. So portfolio first, and then we narrow down which industry we want to look at, and then we go through screening tools that allow us to pick the best of the best. And then we do further research where we perform a stock study, which means that we look into the company's financials, we look at their management, we listen to their earnings calls, and then I think I have my doorbell's ringing. I have to mute myself. Okay, Jay, you want to take over?
Yeah, you pretty much covered. Are you familiar with BetterInvesting?
I just learned about it a few weeks ago.
Okay.
And there are many groups to join, so I just picked one and signed up. I guess that's how I found this group.
Right. There are many online groups. So used to be they're not, they are in person. They are. I will say find the one that connects with you. You know, I felt that the dynamics very important. Also, time. Maybe I don't know. Maybe you're in the East Coast. Some of us in West Coast, some of us in Canada, Singapore, China. But we always meet online, and when we do studies, you were not alone. You always work as a group, and you will. We all have a different experience. Some of us, like myself, started by knowing nothing until I joined BetterInvesting. It's definitely a learning process, but we're all following BetterInvesting's fundamental principles, fundamental investing principles. The software we're using is BetterInvesting tool. The methodology also is BetterInvesting. That's how we got benefits from.
That's great. Yeah.
And there's a handout that you can download for FAQs. I don't know if you saw that.
To learn about our club, I definitely will encourage you to visit other clubs as well, just to see, you know, how you feel these members, because you probably never meet. Chances are, you know, you may not, you know, meet them in person. You never know. Yeah, it could. Yeah, it's possible to. And then, however, I want you to feel that if that's the group that connects with you, to me, I think it's important, the dynamics, how we work together. Not one person to carry all the load. Is we all learning, we all sharing, we all follow stocks. It's definitely a lifelong journey. You know, we do things together, basically. That's why we call ourselves as a learning club. Reason why we want to do virtual, not just because the tax complication. It's also we really want to focus on education. We just want to learn how to invest, to use hypothetical money, treat it as like a real money, how to learn, and then we can offline we can invest in our real portfolio.
Sounds great.
That's the goal. Yeah.
Thanks.
Thanks. Let's move on to the club business. Because Jay, can you talk about the club renewal dues?
Yes. Let me go. All of us probably received the email say that the club renewal dual is a $52 for 1 year. I guess we just pay by year. Obviously, if we can do multiple years, it will be cheaper. However, we understand sometimes our members may not stay for this long. We divided the club dues, $52 divided by number of members. So right now we have 13 members. So each of us just pay $4. That's in addition to the individual membership. Individual membership, we ask that you most of us just pay automatically to BI. If not, as I can tell, like a John Callison, probably you will pay with the club dues altogether, unless you change your payment. So the bottom line is right now each of us need to pay $4 club dues. We need to figure out how we collected the money because we know people from Canada. We have 2 members in Canada, 1 in China, 1 in Singapore. Obviously, Mahash's not here, Jane's not here, Mina's not here. I need to figure out because like Pierre, we're talking about for Canadians, you guys maybe pay to 1 person because does that make sense for you? Your fees like $4, but the dues like $4. Maybe you guys need to figure out how to do this. Yeah, I can take this offline and try to figure out, how can make this not so complicated.
Yeah.
In United States, it's easy. We can do Venmo, PayPal, easy. Yeah.
I guess we have to talk to all the Canadians.
Yes. But it's $4.
Yeah.
So do you want us to Venmo you, Jay?
Sure, please Venmo me $4.
All right.
And when's that due by, Jay?
We actually do is by May. I believe one time June 2022, because one time we got delayed. So now we push out another month. Because I remember our new year starts in May, because our club started in May. Due by June. How about we say, oh gosh, June. Only like a couple weeks. Couple weeks will be June. How about just a couple weeks? I'm going to send an email out by end of May.
May 30th or something?
May 30th, yeah.
Okay.
Okay, thank you, Jay.
Yeah.
So we could probably move on to any purchases tonight. For BMRN, if we were to consider selling it, we probably have to complete a when to sell checklist, correct? So we have to do that first. And we could do that if we want to next month. But for the buys, we had a couple recommendations for buy tonight. I thought we should probably, I'm not sure where we should start because Amazon, Google, and Facebook are all big, huge companies. FAF is a mid-sized company, but we have 1.1% of our portfolio in it already. And Pierre also want to talk about that whole sell it and then buy it back later idea with Amazon. So I'll take a cue from someone else as what to start with, but I guess just what do we want to buy is a good question, I guess, with our $3,400 in virtual money.
So Google is a buy, Amazon's buy, FAF is buy. Facebook.
Was that still a buy after we adjusted it? We adjusted the numbers.
Which one?
FAF.
I don't think FAF is buy because the return is below the 15%.
Right. Plus, we just bought it last month. Another thing we know, the real estate is slowing down, interest rate is going up.
People interested in hearing from Piero about that whole method of trying to sell it when it's gonna before it falls and then buy it back when it not do a real short but do a buy when it's buy and buy back later, sell and then buy back later. Excuse me.
Oh, so for Amazon?
Yeah.
Well,
yeah,
this is my problem. Let's just say if this is real money. If
Yeah.
I don't sell it, I'm only losing on paper. If I sell this company, that means I'm actually losing a real money.
And you have to pay taxes on that.
If we gained, are we do we gain on Amazon or?
Depends on what kind of account.
It depends on if you, it depends on account, depends on you, depends on which account you have, and also depends on if you made money or not.
And what's that called when you, is it a wash, something?
What's called? Whitewash?
When
Short sale,
when you buy it
No, whitewash.
sooner
Yeah,
than
it's a
wash
wash sale.
sale.
You have to be
Wash
careful
sale,
not
there
to
you
buy
go.
it
Thank
within
you.
30, you have to wait 30 days.
yeah, 30.
Yes,
Okay.
whitewash.
Okay.
Yeah.
Okay.
And what's the
So
reason for
I
that?
thought that was interesting. Just learn about that, even if we don't want to do it, we could just learn about it. So we're an education club. So
mhm.
Yeah.
I also want to hear about Disney. Matt is very busy with his work. He just submitted his, I don't know if Mahesh, who's his peer reviewer? Bernard? Okay, Bernard says, yeah, I have not reviewed Disney. I want to know what's going on with Disney.
What about what's our as a club? Do we want to be fully invested?
We're supposed to be,
So
right? Isn't that
we-
one of the principles of
Yeah. So
Yeah.
so even if we don't have it's not balanced. If we have buying opportunities, should we buy even though it's not within currently?
I think so. I mean, it's a good time to
Yeah.
buy. You can
at
rebalance it later.
Yeah.
Hey, Google versus Amazon, who gives the better return based on today's SSG? I don't remember. Did you guys?
I would think Google, but I don't know. Do we have?
What was your return on Google, John? Potential return?
Doesn't Google have
I'll
better
look.
margins than Amazon?
Yes, it does.
Yeah, I bet you it does, but just because. Okay, so
Amazon,
using
sells a
forecast
lot of
average
stuff.
P 12.8,
Uh-huh.
using forecast high P 16.5.
Yeah.
16.5 with the high PE?
Yeah, high P, yeah.
What's the average P? What's the return?
12.8.
Oh, that's real pretty good. What about Amazon, Piero?
Okay, let me take a look at the my SSG on Better Investing. It says using the high PE, if you accept my numbers, it'll be 14.8, and the average PE will be 12.
Oh, very close, but yeah, Google.
Yeah.
Where did we just talk about it? Amazon? Oh, we bought a Google. One share. I don't know. These two companies. Any motions? Who wants to make a motion? Isla, what are you going to buy? If you had 100,000 in your bank, what are you going to buy?
What would I buy? I would probably buy Google.
Yeah.
Okay.
I mean, at this point, I look at Amazon, and Amazon has, in their lifetime, they've not always made money, but they've made money more recently, and their margins are very tight. And I know that they spend a lot of money. That people spend a lot of money shipping back stuff that they bought from Amazon, and I don't know what they do with it.
Oh, yeah, we have a store here close to my house. I would like to visit. Everything's so cheap. Like every day. Oh, so wait, they only open a couple days a week. You can buy. It's all Amazon returns. You can find things $1.
Well, that's a good idea. That's a good idea.
Super cheap.
That's a good idea.
By Friday, if you don't sell, it will go down again.
I know that UPS has said their stores spend most of their time taking back Amazon returns.
Wow.
So, I mean, but okay, all that aside, that's the e-commerce side of it. Amazon does have AWS.
Oh yeah,
which makes them a lot of money.
Yeah.
Yeah.
They are the number one cloud provider, period. Google has Google Cloud, so that's coming up. And of course, Microsoft is knocking on the door. But Amazon does have AWS. So, the e-commerce thing is not something I think that's going to, really bring the big bucks. It seems like over the last several years, AWS has really brought the big bucks for Amazon.
Yeah.
Does anybody use AWS?
Everybody uses it.
I don't think any individuals do, but many, 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 many companies do.
Business.
Yeah.
I don't.
Almost everybody uses some form of cloud stuff now.
But
so
specifically Amazon, though, we use, university uses Microsoft.
They use Azure.
OneDrive, OneCloud, one.
Right, but that's the product. That's not the cloud service.
Our company
Microsoft's
uses
cloud service is
AWS.
Azure, and that's a different thing than using OneNote or Word or Excel. That's one thing, but the cloud service is a different thing.
Yeah, it's whatever Microsoft uses. I call it one.
Well, I'm sure there are a lot of universities, and there are probably a lot of companies that use. Well, Microsoft wasn't it's only been the last couple of years that Microsoft has really gotten heavily into the cloud business because everybody looked around at Amazon and saw how much money they were making. And there has to be some competition. So
I've been using Microsoft's cloud service for a while. Right.
Okay, I tell you, there are top 10 AWS users based on EC2 monthly spend.
Yeah.
Netflix, $19 million. Twitch, I don't know what Twitch is. TWITCH,
It's
$15 million.
Gaming platform.
Oh, is it on LinkedIn? 13 million. Facebook, 11 million. Turner Broadcasting, 10 million. BBC, 9 million. Baidu, 9 million. ESPN, 8 million. That's top 10 AWS users.
Yeah, a lot of big companies use AWS because I think when companies started migrating to the cloud, AWS was pretty much the only game in town when they first started.
Adobe and Twitter, they all use it.
So now, there are a number of different companies that provide cloud services, but that wasn't the case initially. So, and I think companies are loyal to AWS.
We have 4 minutes, so let's decide if we're going to buy it.
Chris, are you working on a large company or medium-sized company?
Medium, I think.
Oh,
so
software
that
company?
that leaves all of those people out.
Oh yeah, because he said he's using AWS.
None of those people can be claimed to being a medium-sized company.
So
we need to decide.
I would make a motion that we buy, I know it's not popular, but 1,000 shares of FAF. It's small, it's a medium company. We don't have many medium companies.
How much of FAF is how much of our portfolio?
9.1.
Oh, okay, that's
Before we start, a quick word from our sponsor. Today's episode, together with our entire Oregon.
As far as Google, I want to mention, I was in Best Buy today, and one of the things that's coming on pretty much for Google is these Chromebooks. And they start students using Chromebooks, and then they use them in college, and they're turning into lifelong Chromebook users. And that puts them using Google space. That's another factor of many factors that is growing in Google. I just want to mention that.
How come we don't own Apple? I mean, we
Yeah.
own all the other big, tech.
Interesting.
So we're getting off track here. Was it, no, did we not?
Nobody may second it. We're just waiting.
Okay.
Maybe Paul, but I did not hear what we're talking about FAF.
If we don't, nobody makes a motion in the next 30 seconds. We need to move on, and because there's a stock step in June, and I think
I move to buy $1,000 worth of Google. I move to do that. John.
Anybody second?
I will.
Yeah, Google's good. I'll second that, but I want some FAF too.
I'll second that too.
All right, good. Oh, I gotta go.
Okay.
Bernard, was that
$1,000?
$1,000? Is that $1,000 worth of FAF? I think that's what he said.
Wait,
yes.
we did Google first. John said Google, right?
Yeah.
And then Megumi seconded it.
They're both in there.
Yeah.
All right.
Megumi did, yeah.
To send that one out.
Okay.
Then there was Bernard by.
Yeah, $1,000 worth, 1,000 shares, $1,000. Well, $1,000. That's her thing.
FAF?
Yep.
FAF.
Okay. Well then, no one else has any motions to buy something else. We can move on, right, to whatever Joanne wanted to do next.
Well, it's on, we need to have, next month is stock study. Anybody want to?
No, next month is July's a stock study, I think.
Oh, it is?
Um,
Okay, you know what to do.
yeah,
Okay. So Jane and Isla are going to do July?
yeah,
The stock
there's still
study? Yeah.
some,
Okay.
still a lot of time on in June, but we wanted to get more time in July because there's no reports in, earnings reports in July. So
Well, I thought there was
that's what chose that.
an education
Guest speaker in July.
topic.
There is.
The
Yeah.
marijuana.
Marijuana, yes.
So what do we have? June? We just have Jane doing her education piece. What else is in June?
That's pretty much it.
I hope
There's
Mina
Matt, Matt was going to do his Disney, but he was going to do that this month apparently. But yeah.
Yeah.
Well, so we should have a stock study next month then, right?
Okay, that's fine with me. Yeah, just
We're going to do Disney next month?
Hopefully.
I mean, Disney will be presented next month.
Yeah.
Yes. He does
Okay.
have a report.
That's
I
great,
just
'cause I
don't
would
have
like to hear about Disney.
Me too. He said that he bought more. I just want to hear more
Okay,
what's
is
going on.
anybody interested in doing stock study next month? No.
I want to. I already done it. I would like to do it, but I want to give to other people who have not participated.
Jay, myself, and Reddy did one in January, and since then we haven't had. Oh, let's see.
So this one for July, is that to do the stock study in July and present in August?
No, you present it in July.
So we're going to do it in June and present in July.
Yes. Yes.
Okay. All right.
So for the June, we would start now and present it in June. Okay, so who hasn't given, Piero, you haven't done a stock study for a while.
I don't think so, no.
No, and who else hasn't done one for a while?
I haven't done one in a while. I guess I was in January of 2021.
Okay, do you want to do it next month? Piero, do you want to do it?
Yeah.
Okay,
Oh,
well,
sorry.
Okay.
pick a topic. Pick a company.
Yeah. Also, anybody attend anything BI is hosting right now? Do they have any good stocks?
Oh, I haven't.
The market's down.
Oh, no.
Yeah, all the market is down now.
I know, but does BI mention anything interesting that is worth to looking at?
We
Well,
should look back at our stock, our watch list. AMT and CCI, the 5G stocks we looked at that were buys but too high.
What about now?
I don't know. So I guess
Where's that information for what those stocks were?
Yeah, I bought those, by the way.
Oh, you already did?
Not passive, but I don't know. I'm making money or losing money. I'm not sure because I have not tracked.
Yeah, I don't know where we track the watch.
Yeah, I bought it I have not tracked.
Okay, but anyway, we're 4 minutes past. So Piero and John, I'll text Mina too. I'll schedule for the next 4 weeks till the next meeting. So just let me know. I'm going to send out. Is Mondays? I think Mondays at this time. Everybody's available, right? In general, Piero.
Yep.
Okay.
Yep.
So that's
Yes.
what I'll probably do is schedule the next couple meetings for the stock study on Monday evenings. Okay. Is there anything else?
I just hello.
Yes.
I just joined. I just joined from the cell phone.
Oh,
I'm
you couldn't.
Hi, Reddy.
You couldn't stay away.
I'm not staying home. I'm not at home. I'm doing on the phone from a hospital.
Oh,
hospital.
What? Are you okay?
Yeah. I'm not okay, but I'm able to do this right now.
Thanks,
Oh
Reddy.
my gosh.
Checking in.
Thank you, Reddy.
We hope you
Yeah,
feel better.
Yeah, we
I
hope
hope
everything is
so.
better.
I hope so.
Okay.
Yeah,
Oh, Reddy.
I just found out I can do this on the phone,
Yeah,
Yes.
so trying it.
that's you sound good on the phone. It sounds
Yeah, if it's 2 days ago, I would not have been doing that, but yeah,
Oh my gosh.
okay. So when do you get out?
in a couple days.
Okay, yay. Sounds good.
Yeah.
Okay. Well, thanks for checking in with us.
Yeah, thanks for letting us know.
Yeah.
Yes.
Okay. Um,
Hope you speedy recovery,
yeah.
Reddy.
Oh, thank you all. Yeah.
Okay. Too bad Hanny left. We didn't get to say hi to Hanny. Anyway,
Oh yeah.
Yeah, see, somehow he did not attend the last meeting, and suddenly I heard that he's doing. I wrote him an email saying, "Can you continue as a non-member?" He didn't reply.
he comes in as he just comes in as an observer, I think.
Observer, yeah.
Once he did that, but real quickly he hung up the meeting.
Yeah. You know what? I'm going to stop the recording. I'm going to stop the recording so then we can just have regular conversation.